Good morning. Monday after a storm, and I am stuck in the mountains, um, which I guess there are worse things. So, having a hard time acclimating to the change of clocks, but I do appreciate that longer day. I'll tell you, seeing the sun up 7:30, 8 o'clock, or at least daylight around those hours, good for my head. So, we've got a interesting week. We have Feds coming out on Friday, and we do understand what the interest rate decision is going to be. There really shouldn't be any shocks there. What's going to be important is what they say afterward. So I think that's what everybody's holding out on right now. Um, Today we have consumer inflation expectations for February and forecast to be 5.9. We'll see what that comes in. Inflation numbers are the primary focus of the market. Then we have PPI for month over month on February. We want to start, they're forecasting 1.1. Previous was 1. So it's still showing an uprise. We want to start seeing a decline in these numbers, ever so subtle, or even a stabilization. Um, would give us some insight into the core PPI. They're expecting it to be up a little bit. So we want to see a stabilization and then even a retreat. A retreat would be nice, but yeah, I'll take a stabilization. Give me some insight into it. And then it's all about inflation, man. Retail sales month over month. Um, then FOMC, building and housing. We need to see a building tick up because that might stabilize prices. Um, and then existing home sales into Friday, and that's about it. I don't see obviously jobless claims going to be a big number on Thursday, so not a terrible looking month as far as news goes. And we are, let's see what I mean. The big news is the market's up. We're looking at Ukraine, but it kind of feels like the Americans are tuning that out a little bit these days. So we're starting to get tempered, focus more on our economy. Yet, God bless them, and the help will continue. The act is not any less horrific today than it was when they first entered. But as far as an economic effect, we're starting to get a little clarity, a little understanding. Some worst case scenarios are priced in. You can see futures are going to open up at 42.27. I don't know what fair value is because obviously we closed at 204, and that would put us at 42.39. But the market moved Friday. Obviously, the future markets move Friday after the close of the U.S. markets. But I'm expecting that we open up around the 42.20 area, which is not bad. Um, and that's it. China's spiking in COVID. These guys, I mean, they have shitty vaccines. They don't have any immunity because they keep locking people down. It's also a good way for them to control their population. So um, they're definitely taking advantage of these people, controlling their information and their freedom of speech. And I mean, we don't even hear about Hong Kong anymore. I mean, everybody's indoors. They could suppress any protests that are going on using COVID as an excuse. So it is what it is. But those are their troubles. If we look at the markets, what do we have? What do we have? What do we have? So here's the daily. We're inside this semi pennant, I'll call it. I mean, this is really the trigger. We have to break that high, but a consolidation like this is pretty good. We're going to open up inside Friday's bar, right? We're looking at all the right stuff. Yeah, we're going to open up inside Friday's bar, and we're going to bounce around. I'm a little leery. I mean, we may get some moves. I'm going to take some shots. I'm going to trade very small because it could just be a choppy market going into the Fed. Like I said, not that there's any surprises. The weekly chart, what did it leave us? It's a very strong bar to the downside. So we're going to have to watch that. Things will get ugly if we break that low of 41.57. So we'll keep our eye on that. Let's see what insight we're getting from. I'm going to look at the time frame of 240. Um, um, so bullish staying above that on the 240. We got a double top right here. I don't know. I'm neutral, man. I'm neutral. It just looks like we're going to chop around. Bullish staying above that bar, but neutral, not looking for any trades. Really no setups that I'm interested in. As far as that 240 looks, this is what the S&P is going to look like on the open. There's going to be an inside bar for today. And that's what I'm expecting. And like I've said before, that's hard trading. I mean, look, this is an inside bar. This baby popped and came back, but ultimately traded like an inside bar. So we're going to watch it. I think that's what we're going to have to endure until the Feds get out of the way. The 10-year, which has spiked. Um, um, I mean, we're looking at a flag on the 240. I can't really. There's nothing here that I call. I mean, we have a little resistance right up here. A break of that would continue the move. It's not motivating me to see a trade. I don't see a trade in it, so I'm gonna have to stay neutral. It's not giving me any indications. Neutral until breaking. That's resistance right there. Bitcoin, Bitcoin. Um, Still in this pennant. Actually, how far back where did we get that pennant from? Oh, that's yeah, still in that pennant, man. We're getting pennants within the pennant. Very interesting. I like this. I like this consolidation. It's showing good orderly trading on it, but now we just got to wait for it to make its move. I mean, there's a nice range. You can on a shorter time frame, you can catch um, some good trades, but it's it's not gonna make any progress unless it breaks the higher the low. I mean, that's where the big move is gonna come in. So you could even look at a 240 on this. I think I'm starting to see. Might watch to see if this builds an inverted head and shoulders right down here, but it's not really that big a move down. We can get rid of this line because it broke. Looks like we could stay bullish above that line, or if you're just long, you could stay long, but I don't see a long term or a swing trade on it. Again, you could watch the lower time frames and find good entries and exits. Um, we just let it float down. It overdid it. Let it close those gaps. That's all we're going to wait for to get involved with that. Oh, that's home builders. I'm just watching those guys. This is energy, right? Yep, this is energy. Energy's got a nice consolidation on it. That's about it. There's nothing exciting. I mean, it looks like it's topping. It's putting in some topping patterns. Um, Look at that gap right there on that 60 minute, on that 240 minute. That's crazy. You have to just stay away from all these trades. I think they all ran already. XME is minings and metals. Looks like a double top is going in. So if you got your scrap metal, unload it. ExxonMobil did very, very nicely for us. We started talking about it 20 points ago and getting involved 20 points ago. 24 to be exact. I mean, we hopped out of it and got back in when it dipped down below or around 60. And that did very well. So that's about it, man. Nothing exciting. Um, just wait for that Fed to get out of the way. Watch China; they got a spike in omicron. Yeah, that's shutting them down, um, which may add to inflation. They're not producing shit, but we shouldn't be buying their stuff anyway. So we're just a few things out there. You got to keep an eye. Hopefully, all this stuff mellows out in the next month, so that we have a nice, easy summer. We could all just enjoy ourselves and watch the season change. So anyway, remember, calm and cool, be at peace when you trade. Get a little meditation in, and subscribe, hit the bell, hit the like, because when you do that, it really helps my channel with the algorithms. And check me out live. I'll be streaming today. I got everything up and going, so we're good to go.